And let's meet our panel from New York. We have Amy Holmes. She's a political commentator and co-host of the public television show In Principle. From Beijing, Zhao Hai is an assistant research fellow at the Chinese Academy of Social Sciences. Here in the studio is Saruhan Hatipoglu. He is a global economics analyst for CGTN. And Ryan Patel is a global business executive joining us from the US West Coast in Los Angeles. Welcome all. I mean, let's go to Beijing first. Zhao Hai, very quick retaliation there from Beijing. We had been expecting it. What's Beijing's strategy going forward? Or are they just having to respond to a Trump team here who doesn't seem to have an end game in sight?
Yeah, because Beijing is receiving mixed messages from the Trump administration. On the one hand, they are extending the hand, trying to negotiate with China. On the other hand, they're slapping the tariffs on Chinese export to the United States. So right now, Beijing's strategy is very clear. We're going to stand our ground. We're going to fight against any protectionism, any unilateralism coming out of the United States, and we're not going to negotiate under these terms. I think the U.S., until they are honest and sincere about talking to China and reach a deal at the end of the tunnel, so far I think China will continue to fight back tit for tat against any U.S. tariffs. And I think ultimately Trump, now feeling very good about its strategy, will go all the way to include entire China's export to the United States. So I think China will stand its ground and continue to meet the U.S. side with all the terms that they're putting on the table.
Just a quick follow-up, Mr. Zhao. The U.S. Imports more of Chinese stuff than China imports of U.S. stuff. The U.S. position has been the Chinese are going to run out of tariffs, and so therefore we win. But there are other measures being considered in Beijing. They've been hinting at, correct?
Yes, I think so. Because China has already said, it's going to combine quantitative and qualitative measures to fight back the U.S. pressure. And I think at this point, we'll have to wait and see until the next round. Because so far, at this round, China is not meeting the U.S. For the exact number, because as you know, the export from the U.S. and export from China are not equal. However, I think at the end of the day, because China exports mostly to intermediate good and also consumer goods to the United States, U.S. is hurting itself, and China is imposing tariffs against the finished products from the U.S. So I think in this respect, the U.S. actually feels more pain.
Saruhan here in the studio. That's an interesting point, isn't it? This whole idea of tariffs. The U.S. president seems kind of excited when he says we're going to have billions of dollars coming in. I'm still questioning whether he understands that it's U.S. companies that get taxed and the costs get passed on to U.S. consumers. Of course, Chinese companies can suffer through a loss of business. What's going on here with this whole tariff?
Well, absolutely. There's a miscommunication here. First of all, that money is not going to go to the governments. These importers pay for this money. That's to begin with. Secondly, I think what we are seeing here is an escalation that didn't need to go to this level. Now we just talked about how China could respond here. Yeah, China doesn't have tit for tat for trade, for exports, but there are a lot of avenues there that China is going to be using. One of them is its currency. Let's remember 3 years ago, when the currency lost value, what happened to the stock market in this country, that August 2015. And stock market gets a lot of emphasis from this president. So that is one thing that we need to keep in mind. Secondly, China can make life of American companies, they're miserable when it actually doesn't extend permits or delays licensing.
Bureaucratic. There's reports of that already happening.
We have seen that with Qualcomm and NXP Semiconductors, that $44 billion purchase. It's not going through because 8 global regulators approved that. Chinese regulators did not.
Amy, I'd like to bring you in, but first of all, I want to play a soundbite from US President Trump, really sort of defending US industries and threatening to tariff now nearly all of Chinese imports. Let's just take a listen.
If there's a retaliation against our farmers and our industrial workers, our ranchers, if any of that goes on, we're going to kick in another $257 billion. And that'll be also at 25%, which we don't want to do, but we probably will have no choice.
The ranchers, the farmers, mentioning those by name, Obviously, they've been hit with retaliatory tariffs, Amy. We've also got an election coming up. Is this going to hurt farmers and ranchers more than it does Chinese businesses, do you think?
Well, in the short term, that seems to be happening, and the U.S. government then is bailing out those constituents to try to soften any economic impact. And the administration also makes the argument that, look, there was also the corporate tax cut that was passed, so some of larger corporations, they also have this buffer for Donald Trump to be engaging in these, trade tactics. But your previous guest said, called it mixed messages. You could also call it carrot and stick. And interestingly, the New York Times just reporting this week that China once sounded tough on trade, but it's running out of options because one of your other guests mentioned that they've maxed out on the amount of goods, $60 billion of American goods that they're importing, to be able to put tariffs on, and America can keep going. But I think that one of the wild cards here is that China has a much longer horizon in terms of planning, both economically and politically, than the U.S. And they can wait this out. Jack Ma, the CEO of Alibaba, who's about to step down, he said, look, China could hang in there for 20, 30 years and outlast this president and the next one and the next one.
Okay.
So will this actually work as a tactic to get China to concede, to acquiesce in some of the administration's demand in terms of fair trade? I think that's a gamble.
See, Amy, I just want a quick follow-up, because the problem with a lot of Chinese negotiating position, as has been reported, is that they don't really know what the Trump administration's end game here is. Is it changing in some practices when it comes to technology transfer or allowing more market share? Or is it, as a lot of people in Beijing suspect, a fundamental change to Beijing's economy to stop it from becoming a middle-income power and belong? Containment economically, if you like. Where do you see the Trump administration going? Slight changes here and there, or a radical rethink of the U.S.-China economic relationship?
I think President Trump would be very happy with a, small to medium-sized victory. He declared victory in his negotiations with Jean-Claude Juncker when he came to Washington, D.C. to negotiate, and they, made a big announcement, even though a lot of analysts said, where's the meat on these bones, and is there actually going to be follow-through? President, that's the whole entire point of negotiations, is to come to the table, and some of the things on the table, as has been mentioned, is intellectual property rights, which China is infamous for stealing. We also have just the Chinese model of economy, which is a lot of state subsidization and state support, which the Trump administration, actually European governments as well, say puts the thumb on the scales and makes that an unfair competition with other countries that don't have those practices.
Ryan, I want to bring you in here. I was at the hearings before this latest tariffs were announced, and you heard company after company saying they were against the tariffs and how it would hit their businesses. In the end, the Trump administration did remove some products from this list, including smartwatches, bicycles. Maybe they're thinking about the Christmas presents under the tree as well, Bluetooth devices. But generally, there's a lot of companies who are going to feel pretty hurt by this. Break it down for us.
Yeah, I mean, definitely the ones that kind of won in this list is Apple and Dell, because they obviously kind of complained and they kind of saved a little bit on some of those lists. As for the 25% that actually gets hit in January 1st, that is timely appropriately for the consumer shopping holiday season. So overall, the consumer probably won't feel it unless something else changes in the next week. Maybe it will, maybe it won't. But as for the small businesses and supply chain, they will get hit the hardest. I think the bigger companies obviously are complaining now, but the companies you don't hear are the ones that are not just the startups, but the small, medium sizes that actually rely on China and even in the region. They don't have anywhere else to go to buy these goods to put together, because they're either in 6 or 7 month contracts to buy, and it's the supply chain is too long to kind of change right away. It's not that nimble. So they're going to get hit. The question becomes, how hard are they going to get hit quicker enough?
Thank you so much. I want to go back to Beijing. Zhao Hai, I want to read you the end of the statement that was issued by the White House announcing these sanctions. In the end, this is President Trump. Hopefully this trade situation will be resolved in the end by myself and President Xi of China, for whom I have great respect and affection. That sounds to us journalists, when we read that Trump wants a meeting with President Xi to sort this out mano, if you like.
Yeah, it sounds like from that statement, President Trump left the door open. And we're here expecting some kind of meeting at the end of the year. Firstly, we thought that President Trump may come to the APEC meeting, but he canceled that. And then now the hope is that both leaders will meet at G20. So I think both countries will work toward that goal. But at present, from the current policies coming out of the White House, we don't see a clear path toward agreement at that moment. So I think both sides, particularly from the U.S., we need more positive signs from the U.S. government, and they show the willingness to solve these questions and sincerity to solve these questions. Because now there's so much uncertainty, and even if we reach agreement, we don't even know if the U.S. government will keep its promise and keep the agreement intact.
That's a very good point. So, Zhao Hai, where is the compromise here? Where is the deal? What could it look like? I know I'm putting you in the spot here, but where are the areas where Washington may bend a little and Beijing may bend a little?
Well, I think the question is whether or not the trade deficit is a real problem. If the U.S. Is recognizing that the trade deficit is a function of a different domestic economy, then we can agree on certain things to reduce, change our domestic economy and reduce the deficit. And on the intellectual property and technology transfer front, we can definitely reach a deal, and we can sit down and negotiate, trying to change China's domestic behaviors and laws. And also we can go to WTO and upgrade WTO regulations so that both countries can abide by the same rules. But so far, the U.S. has resorted to unilateral actions instead of bilateral or multilateral actions. So that's the area that for us is the concern.
Well, Nathan, if I
yeah,
jump
go ahead,
in,
Amy, quickly.
Yeah, sure. It's already been reported that there's been some consideration on the part of China to lower its tariff on the importation of American cars, for example. We tax at 2.5% importing cars into the United States. China at the moment taxes at 25%. That's a huge gap, and there's been some discussion that they might be willing to lower it to 15%.
Well,
so yes, there are areas where this can be negotiated, but we have to talk about some of these, real discrepancies in terms of fair trade practices between China and the United States. And when you have, state government-owned banks giving preferential loans to Chinese companies that American companies aren't privy to, of course you have corporations say, hey, look, that's not fair.
Yeah, Saruhan, you want to pump in here?
Thank you. We've been talking about the tariffs, and I think that's a great topic. It's a hot topic right now, but this is not about tariffs.
Thank you. This is what I was going to ask you. Thank you.
This is about China 2025. This is about China 2030 with the artificial intelligence investments.
China's industrial policy to become a great economic power.
Look at some numbers. There are 5 largest startups in the world. 3 of them are Chinese. The investment in startups in China was $4 billion in 2013. Last year, it was $63 billion. These are huge numbers. Technology services in China grew 30% in the first quarter, year on year, fastest segment in the economy. This China is not Ronald Reagan's China 20, 30 years ago. This China is moving, has already to a certain extent moved from low manufacturing to advanced manufacturing to high-tech products. And this is about dominance. The global dominance. The tariffs is just
for the industries of the future. We're talking about 5G technology, AI.
Robotics, absolutely.
I'm so glad you brought that up, because Ryan, I want to talk to you. I was listening to Peter Navarro, the trade advisor to the president. He won't talk to us very much. He doesn't want to come on the show. I get it, because we have a lot of questions about his economic policy, and he was basically saying that, look, it doesn't matter if US companies can't source in China because of the tariffs or whatever. Vietnam can fill the gap. South Korea can fill the gap. Hey, we can make flat screen TVs back here in the US. And that leads a lot of people to scratch their heads and think, this is not the economy in which we live or the one we're going to live in. What's your response?
Well, no offense to Peter Navarro, but Peter has been, for decades now, has been against, obviously, China for many, many decades. So it's nothing recent. So that doesn't surprise me why he wouldn't come on the show. But when it comes to his statements and what the reality is, if his statements were actually true, let's say it's true, then follow it. Why are you even doing any trade with any other country, right? Let's just get to the end point and move on. But that's not what's happening. I think what is underpinned in this whole thing that the U.S. needs global trade. Let's just be very frank. China needs global trade. And like we said, it's about a positioning, who's going to get the best deal. Right now, the U.S. is using this as an opening to negotiate on multiple storefronts, not just one issue. That's why this is continuing to drag and could potentially drag even longer. As Jack Ma said, we could be in there for years.
Zhao Hai, yeah, Amy, just
right,
1 second. Sorry, Amy,
sure,
1 second.
Can I jump in just 2 questions I want to talk about?
Sure, yeah. Zhao Hai. I wanted actually
Can I say something?
Yes, go ahead. Go ahead, please.
2 things I want to address when my colleagues on the other end said, number one, about the auto tariff. China has already declared it's going to lower the auto tariff overall, and because of the current U.S. policy that this is not executed right now. However, in the long run, I think China will reduce auto tariffs for sure. And also, China's overall weighted tariff is not much above the U.S. So I think there's a lot of places where China and the U.S. can reach a deal at that moment. And the other thing is about technology. I think.
Go ahead.
The other thing is about technology.
Go ahead, Mr. Zhao.
Yeah, so the other thing about technology is that, yes, there are large Chinese technology companies rising. However, I think that is based on the U.S. technology and cooperation between U.S. and China. For instance, China's cell phone companies and telecommunication companies, ZTE or Huawei or other companies, they're based on U.S. technology and they have a lot of chips coming from the U.S. So overall, it's a cooperative relationship, and you can see the pie growing instead of both countries cutting the same smaller pie. So I think in that respect, U.S. and China needs more cooperation and more trade instead of less.
Yeah, Amy, I remember G2, where China and the US were so interlocked, and the champions of the future were going to be globalized companies, whether they were based in Beijing, Seattle, or Shenzhen. What's happening here?
Well, that's if everybody's willing to play by the same rules. But I wanted to get back to, and I think it's important in understanding kind of, where President Trump is coming from. I understand these discussions about the economy of the future, 2025, 30, 40 and on, and AI and so forth. But I think Donald Trump has been very clear for decades of his life about what his focus is, and it's always on fairness. He didn't think trade with Japan was fair. He said that today in his White House press conference with the Polish president. And he's been banging on about China for many, many years in terms of fairness when it comes to trade. I don't think that he has this long-range global vision about dominance and, these two global powers battling it out 20, 30 years from now. I think he's actually pretty focused on what's right in front of him, what he sees on, what he sees on the paper, and what he wants to discuss with his counterpart in China.
I'm glad you mentioned fairness. Saruhan, I want to bring you in here. I just finished Bob Woodward's book, Fear. I recommend it to everyone. A fantastic book on the White House. I've read a lot of them. It's very good. Gary Cohn, the former national economic advisor, basically tried to say to Donald Trump, look, the U.S. is a service economy. Forget about the aluminum jobs, the jobs of the future. And the fact that we have big trade deficits is good because we spend less on the stuff that we can't make cheaply and more on American stuff that is much higher value and creates more jobs. Where are we in that? Because it seems to get lost in the discussion.
David Ricardo's comparative advantage theory doesn't apply in the White House.
Thank you, Professor.
Absolutely not. Look, the problem here is they're looking at it. Gary Cohn was right. The reason that Gary Cohn has left is because he's seen these tendencies grow in the White House. I think we should put the cards on the table. That's why he left. The issue here is it is not only about trade deficits. Trade deficits, if you're a developed country, your consumers are strong, they're spending money, you are going to have a trade deficit, period. And it's not a bad thing. Nathan, look, you have trade deficit and surplus, I have trade deficit.
Yes, I still owe money on my house.
Exactly, mortgage, right? That's
a
a deficit, but you have surpluses with your employer, right? You get money every month. So this is normal. Now, if you balance everything, the quality of life decreases. We're talking at the individual level, right? You couldn't buy a house, I couldn't buy a house, we had to get a mortgage for that. Same thing with countries. The quality of life will decrease. You produce what you produce best, and then get what the other countries produce better, more efficiently than you, and everybody will be happy. Simple as that.
Ryan, sorry, I just want to bring in Ryan here. Where does this end? Because, we have two fundamentally different views of where the 21st century is going when it comes to US-China economic relationship. Are we looking at a full decoupling of the US-China relationship, or are we looking at some sort of Trumpian compromise potentially after the midterm elections?
Well, here's my thing. There's going to be a deal. The question becomes when. I believe both sides will come and find an arrangement that will be happy for both. Remember this, it has to be a win-win for both. It cannot be one way, because as you can tell by the tit-for-tat strategy, both sides will look bad if someone looks like they're the weaker person, correct? So I think there will be a deal. Yes, the midterm elections are coming up. Trump has stayed on course on what his strategy has been. I don't see him coming down from that unless there's a big win that he can hang his hat on, or he's going to continue to go down this route. And to the point for China, China is going to continue to hold its own until they can see that there is a win. Because listen, both countries at this point can't back down for their own consumer base, even if they're losing money in surplus, because they've got to create a deal, and they both know they need each other. Let's just be honest. They do both need each other, because right now there is no plan B that's fast enough.
Part of the deal, Amy.
And Nathan, I was going to say, we can talk about comparative advantage, we can talk about trade deficits, but when you're looking at it politically, and the president and the administration, he campaigned on this issue, as did Bernie Sanders, by the way, in the Democratic primary. And if you talk to steel manufacturers, for example, as I gave a presentation before the election, and they to a one, they wanted these trade policies to protect them from China dumping cheap steel on the global market. There was actually a march in Brussels on this issue. So I think we also have to keep in mind the human side of this, because Donald Trump certainly is keeping that in view.
Zhao Hai, last words. How's the Chinese consumer feeling right now? No demonstrations outside Starbucks and the like?
Yeah, well, first of all, I want to say that we're seeing down the road there will be a competitive relationship between U.S. and China, and we hope it's a positive competitive relationship instead of negative, because that's going to be a win-win relationship. And in terms of Chinese consumers, so far I don't think China is feeling any major impact from the tariff. But I think moving forward, with more and more tariffs added, both countries will feel, consumers will feel that they're comfortable from the market.
Mr. Zhao in Beijing, our guests here in the United States, whether it's the West Coast or here on the East. I'm afraid that's all we have time for. I feel we could always do another show on this, but that is it for this edition of The Heat. But of course, the conversation does continue online. Join us on CGTN America's Facebook page to comment on this or any other show, or chat with us on Twitter at CGTN America. I'm Nathan Koenig in Washington, D.C., and thanks so much for being with us. See you soon.